Hi, this is Michael Waits. Welcome to Insurance for the New Possible, a Chubb conversation. I am joined by Edward Ler, Executive Vice President and Head of Southeast Asia at Chubb, and Iwan Juwono, the Head of Insurance at Grab. Thank you both for doing this. How are you doing this morning?
Great. Thank you for having us here, Michael.
How are you?
Hi, Micah. Hi, Iwan. Welcome to the Chubb Asia Pacific office.
Oh, it's
Glad
nice.
to see you.
It's nice to
It's
be
a
here.
very beautiful office, I have to say. It's got great views and it's got a great open vista.
I have not been in like a corporate style office in years.
I'm envious.
No, but it's really beautiful, actually. And it's been recently renovated, yeah?
That's right. We reopened in January this year. And I think the barista service was clearly the highlight.
I love it.
I gotta say so. As an Australian, I was like, oh, this coffee is actually pretty
It
good.
is really good, right? It's
Yeah.
not just like lame coffee that you get somewhere. I
Yeah,
thought it was
exactly.
really good.
Current run rate, I think we do about 500 cups a day.
Do you really?
We do.
Wow.
I love it.
Yeah.
I love it. So when I was at Goldman Sachs, we actually we were on the 48th floor of the Roppongi Hills building. I presume both of you have been to Tokyo.
Yep.
And they put a Starbucks on the 48th floor.
Oh, that's a tragedy.
It was, but there was a reason why they did it. But anyway, we at least had coffee there. And what they did was they took some of the old employees from the old building where we were and put them upstairs. So it felt comfortable. Anyway, before we jump into the main part of this discussion, and we'll start with you, Iwan, I want to get a little bit of your background for some context.
Sure. So I was born in Indonesia,
Okay.
but I grew up in Australia. And I guess to cut up briefly, I'm a qualified actuary. I worked a little bit in Australia, UK, and I moved to Singapore and Southeast Asia about 8 years ago.
So you've been in the insurance business your whole life.
Almost my whole life, yes.
An actuary. My grandmother was an actuary.
Oh, was she exciting?
My grandmother was very unexciting. Very
Most of us are not very exciting.
Oh, stop it. But she was amazing. And think about it. My grandmother was an actuary in the 70s.
Oh, that's when the golden days.
Right. Like she was doing math on paper,
Yes.
probably, because there were no computers.
Yeah.
Right. So that was my grandmother worked for Aetna.
Wow.
So that was my introduction to insurance.
Wow.
Anyway, we'll get back to Indonesia, into Australia in a second.
Yep.
Edward, how about you?
Well, thank you for asking, Micah. I'm a Singaporean, born in Singapore. The insurance career has been rewarding. So for me, I've worked in 5 countries, both in Europe and in Asia. It's been very eclectic, the roles I've done. I've done roles in reinsurance, country management in a few markets, portfolio management, corporate insurance, distribution. So to name it, I'm a generalist, I think.
What do you mean by portfolio management?
Well, it means how do we design product strategy, look at product profitability, segmentation, stuff that Iwan knows very well. Not every product makes money, but we try to make a good balance of that.
Funny. And you two actually know each other relatively well too, no?
Well, we did as of last week.
As of last week.
Exactly. Well, the insurance world is pretty small.
I presume so.
I think we know some common people in the market,
Okay.
and we have some shared experiences with prior employers, so that was cool.
Yeah, and we have a lot of gossip about common people.
We love gossips, of course.
Let's try not to go there
Uh-huh.
unless it's really necessary.
Keep us safe then.
Yeah, let's keep it safe. Look, we want to talk about the democratization of insurance, but I think before we do that, we kind of have to define what that means. Maybe, Edward, we'll start with you. How would you define this idea of democratization?
Well, it's a great topic. It's a great question and something quite fundamental. For me, is the ability of any individual consumer or a corporate entity to be able to define its needs for protection of its assets, as well as all the risks that they deal with. One can choose how to deal with different risks. And I think through a process where we can make insurance more accessible, customers will be able to create bespoke solutions for themselves and potentially be able to have a transparent access to what their risk exposures really are. So these are very big, fundamental, high level discussion topics. But that's my ideal as a person, as an insurance leader, and I hope we strive towards this direction. Yeah.
Nice.
Iwan?
I think mine is a little bit more of a basic definition.
Go ahead.
And it's probably more shaped around my own experiences.
Makes sense, though,
And
right?
I think probably for me, when I look at that topic, I interpret it really as access for insurance for people who don't have access. 'Cause at the moment, actually, I really strongly feel that a lot of the insurance industry is very much focused on the middle class and mass affluent and high net worth. And there's really not a lot of access for people who are really underserved. And that's really what I would see as democratization.
So this is what we call financial inclusion.
Yes.
And both of you talk about access. And I think access actually starts with literacy and
Yes.
financial literacy. So because you kind of brought it up, can you talk about why financial literacy matters into then access to information, and then how you expect that to happen?
Sure. So I think I probably prefer to really start that by a story.
Go ahead.
So
Yeah, it's a good idea.
I think it's more like financial literacy, I think, of course, can be very easily defined, but it's from our own anecdotal experience from actually interviewing our own drivers and customers, for example.
Right.
Actually, financial literacy means actually understanding what insurance is and how important it is to their lives and their families' lives. And that to me is the heart of financial literacy. We can talk about risk exposures, we can talk about portfolio management and asset allocation management,
Right.
but fundamentally, for most people, at least the people that I deal with,
Right.
for them, it's all about protection and understanding the necessity of insurance.
But so you mentioned this before, right? You said you're a generalist, which is just a way of saying I've done a whole bunch of things. You couldn't do your job actually unless you'd done all the other things in between. Right? I mean, I know this from my own career. The only way to be an effective manager is really to understand all the pieces that go into the jobs and the positions that you're managing.
That's right.
But you talked about risk as well. And in the same way that your career started here, this is what you're saying, right? You have to start here with the literacy and the understanding of you finally made enough money, right? You've struggled and made enough money to get this asset, whatever that asset is. And we can talk about tangible versus intangible too. But you have this asset, but now you want to protect it. So you're not even thinking about the risk aspect of this. You're thinking about protection. So what is your view from your perspective through all your career as well on that difference between when you just think about protection versus what that risk analysis is, if that makes sense, yeah?
Yes, I think, Michael, you touched on a great point. And first, I'll say what Iwan say about making insurance financial literacy as a key objective. I agree on that as a fundamental baseline. But the reality is the risk paradigm is changing. Well, as you say, as we grow older, we have different needs, and we're regularly assessing our needs. As we start a family, we have different needs, and it's a dynamic issue. So, being a risk professional, I see that every day, whether it's for the everyday consumers and for small and big businesses, and what was an exposure or a risk per se is today treated in a different way. And there could be a new risk, for example, that we will be facing for a new businessman. I don't want to open a Pandora box.
Please
for
do.
example, cyber risks.
Oh, we can spend all day talking about
We can
cyber
talk
risk.
about that the whole day.
But but really simplistically, right? You can't even get to cyber risk until you talk about connectivity risk.
Exactly.
Right. So one of the ways that democratization takes place, I think, in my mind, and you know this from your drivers, right? So let's think about this. If your drivers are not connected, they're not drivers.
That's right.
They're just guys and gals with bikes that don't do anything because nobody can order anything up. They can't deliver food. They can't pick people up.
Yep.
Whether it's a bike or a car, it doesn't matter. So you're starting again at the beginning of this connectivity risk. And this is an intangible asset. I can't feel it. I can't touch it. But I know if it goes away, I need to have that protected as well. Do you have those conversations with the drivers too?
We do. So I think in terms of connectivity, for us, it's very, very basic. Really, it's the mobile phone.
Yeah, completely.
But
the whole
actually-
thing's mobile, right?
Exactly. But for our driver partners and our gig workers, a mobile phone is just as you say. It's not just a phone.
No,
It's
no.
actually one of the tools they use to earn their living on
Right.
top of their bike, on
Right.
top of their motorbike or car. So it is an important asset to be protected.
Yeah.
And that is something that we also do consider. But actually for us and the philosophy that drivers come by, actually their most important asset is themselves.
Yeah, I mean, of course, right? So if they have a health problem,
That's right.
If they have an accident,
That's right.
or I forget what the car companies call it. They don't call it accidents anymore. I think they call it collision.
collision incidents, I suppose. So I think
Yeah.
I think Chubb would probably know better than me.
Well, I was on the phone with a guy who runs this whole company called Nexar, and Nexar is a business that basically puts cameras in the front and the back and all over the car.
Oh, yes.
And they're trying to do big data analysis on how to help people become better drivers, but also provide information to insurance companies.
That's right.
So that the risk is better understood. And I said to him the word accident. He said, we don't use the word accident. We use the word collision because by definition, it's not an accident.
I think it's a philosophy where
think so
it's a
too.
philosophy where accidents can be prevented. So I
think
kind of understand where they're coming
Yeah,
from. It's a
yeah.
very, very nice sentiment.
It was a little nuanced, maybe,
Yes,
for lack of a better term.
it is.
You talked about the risks being dynamic, but I think they're dynamic on a matrix.
Of course.
Right. So it's not just, and I think that that's obvious, right? But that matrix means that, and let's just talk about a couple of those pieces. The first is as your life changes, right? So as a 22-year-old, I'm pointing at myself, that's a fantasy. But as a 22-year-old, your life is different than as a 27-year-old with children. And as a 45-year-old with older children who are maybe entering university or thinking about getting their own jobs, depending on like where you live and how your life is going. But also, it's on your own earnings, too. So you have this family status with your GDP per capita status as well. How does that impact? Like how does it matter if people aren't insured? Let's look at it from reverse, right? And what role does GDP per capita play in that democratization?
Well, it's a big topic, but I mean, sticking to the core of the democratization of insurance, I would say that understanding how the per capita spend of insurance to GDP give a sense of assess of insurance in the market, and they're all very idiosyncratic market. Every market distribution regulations are very different. For example, in Indonesia, as Iwan might know, being in the Grab business as well, insurance is largely not compulsory. So it's the access of insurance is really through embedded insurance.
Even motor insurance?
Even motor is
it's not compulsory in Indonesia.
By
It theoretically is.
Okay. Go ahead.
So I would say that's one aspect
Okay.
of using GDP measures of insurance penetration. The other aspect, of course, is about the development of a society, right? The material gains, the asset accumulation, and of course the intensity of the labor markets and economic development. We talk about the fact that as countries and its population move into the middle class and beyond, right, the needs will increase, the risk will increase, and not everybody know that despite being wealthy, that you got uninsured or you got exposures to mitigate, whether on a personal level or for the family or for the assets that you own. So I would say it's still a good barometer, but let's not be too sticky about the percentage because every country is going to be different. We
I
all
think
have
so.
different social economic background.
So can you talk a little bit again? Sorry, did you want to say something?
Yeah,
Go
actually,
ahead.
I think I just want to expand on that. I
Please
agree
do.
with Edward that GDP per capita is really, it's a very good high-level measure,
Yep.
but it really does lose a lot of nuance.
Tell me why.
Like, for example, taking Indonesia that Edward mentioned, actually a good deal, actually a large majority of that GDP per capita has to do with investments and savings products.
Go ahead.
And so,
What does that mean, though?
so for example, in Indonesia, in the life insurance space, the two
Right.
biggest product categories are investment-linked plans
Okay.
and endowment plans. And these are saving plans that are really, again, targeted to my previous comment
Right, to the
towards
middle
the
class.
middle class.
Or the wealthy
Or
class.
the wealthy.
Yep.
So actually, when we look at the GDP per capita in a lot of countries, what it really doesn't show is the access of insurance at different stratas of society.
Right. And can I ask this, too, though, because I think this is quite important. I live in Thailand.
Yes.
The GDP per capita in Bangkok resembles nothing like the GDP per capita, even in another big city like Khon Kaen,
That's right.
right? And I have to presume, so Singapore is unique, right? Because it's smaller, population around 6 million, right? But it's also kind of self-contained.
Yep.
So access in the city-state itself is pretty easy.
Yes.
In Indonesia, there are 18,000 islands,
That's right.
right? 17,000 rounded, but yeah, you know what I mean. But also, the GDP per capita in Jakarta is going to be much different than the GDP per capita even in Yogyakarta or
That's right.
Jakarta, yeah? So what is the impact from a penetration standpoint? I want to start with you because you brought it up, but then for you because your remit is all of Southeast Asia
Yep.
between the cities and the countryside? Because this is really gets to the heart of the democratization, right?
Yes. So fundamentally, from what little I have seen, I am not a genuine expert in Indonesia. I've only been there only a couple of times. So this is really from my own personal experience that I've seen. What the fundamental problem is that, as you mentioned, Jakarta's GDP is several times that of every other part, especially beyond the tier 3 and the rural countryside.
Right.
And so what actually happens is that for a lot of these insurance companies, and I'm not trying to blame insurance companies here, but for a lot of insurance companies, of course, they are trying to make a profit. And for a lot of the insurance agents, they're also trying to make a profit.
Sure.
And it only makes sense that really you would be trying to sell the products to the people who can afford it, i.e., again, the middle class in the tier 1 and tier 2 cities.
But also, to be fair, right?
Yes.
Look, I brought it up, right?
Yeah.
So I don't disagree with you. But as you're saying this, I'm thinking, what's changed, though, to make that access possible?
Yes.
And you mentioned before the mobile phone.
Yes.
Even 5 years ago or 6 years ago, just having access, right? Prepaid versus postpaid, all these things matter in just the ability to get access to product.
Yep.
Even knowing those products exist, because even if you had a mobile phone, if you didn't have the financial literacy and you weren't financially included, even having the phone, you didn't know.
Yes.
Right? So it took a while for that to happen. Sorry, I feel like I interrupted.
No. And actually, that's a great point. And that's actually a shift that we are seeing happening. So when I was a consultant in this part of the world, I used to work with a company that actually specialized in tier 3 and rural countryside insurance.
Fascinating. Tell me.
And actually, when I looked at operating processes, actually it was very well done. And they actually relied almost entirely on paper and a wide network of agents in the rural countryside. And they could make it work for a while.
Right.
I won't describe what happened afterwards, but so, and it actually worked out. They actually had a lot of penetration in the countryside they had high single digit millions of policyholders.
That's
at
a
the
lot.
peak of their life.
That's a lot.
It was a lot. And actually they did a lot of good in that countryside.
Right.
But unfortunately, actually, when you look at that as a percentage of the total tier 3 and rural countryside, it's still quite small, especially when compared to the tier 1 and tier 2 cities. And I think there's a lot of reasons behind it. Like fundamentally, there's only about a few insurance companies operating in the tier 3 and rural countryside. Majority of them choose to focus in the greater Jakarta area and the 6 tier 1 cities. And this is a common experience we see in Thailand and Vietnam and the Philippines. Philippines is actually another great case study for this.
It really is.
Yes.
Sorry, do you want to comment on, because your experience is different. Please go ahead.
Yeah, I'd love to. And I guess the point I think, Michael, you make about the mobile phone access is key. I think I make that reference during when I wrote a recent LinkedIn article that reducing the protection gap is really contingent on the smartphone access, which obviously allows more interaction between consumers and providers like ourselves and ecosystem players like Grab. The key for me is this. When I think about Southeast Asia in its broader sense, there's a broad expanse of mountains, borders.
Sure.
Right. Cross-border access is not easy, and of course there's a lot of accessibility issue. Right. I think successive governments in many parts of Southeast Asian societies have made infrastructure, building infrastructure, airports, seaports, expressways,
cell towers.
Exactly.
Right.
Cell towers.
Cell towers really important.
An important part of their business. A big part of the governance. And I've had, of course, first-hand experiences seeing that. I've traveled widely, having lived in Indonesia from Aceh, Banda Aceh. I've been to Banda Aceh. I've been to West Papua. I've flown into Sorong Airport. And of course, I was always very interested in what's going on there. So, as most insurance commercial enterprise, would do, right? They will focus on where the opportunities are.
Right.
But the emergence of ecosystem platforms, Grab is a great example, as well as the devices, smart devices, as Michael, you so rightly put, is really the convergence of a very opportune time for us to really step up on this access game or this challenge. And I believe working together with other financial services ecosystem, we're stepping up, right? We're stepping up the plate to make that happen. It won't be overnight because we still got to address the issue of
That's right.
changing societal mindset, right?
Sure.
What the millennial wants is different from what the generations before them want. So it's a broad topic, it's a social topic, but I think we're on this very exciting time in our lives.
So many interesting things you've brought up there, and I'm just going to try to hit them one by one. You said this earlier, but maybe you can help talk about this idea of embedded insurance and product relevance, right? Because as you move out of the tier 1 and tier 2 cities, the things that need to be protected, and even the understanding of protection is just different.
I wouldn't necessarily actually it's different.
I don't know. In other words, the housing stock is different. The automobile stocks are different. I guess at the core, they're similar products.
Yes.
But again, affordability, accessibility, understandability, in the context of those products is very different. So from an embedded standpoint, putting the products in a place and in a way that is relevant and available for people in tier 3 and tier 4 cities is different than tier 1 and tier 2.
Oh, very, very different.
So how does that work for Grab? Because Grab, from a platform, and this is what makes it really interesting, right? As it's developed over time, right, from a ride-hailing company, food delivery company, into a super app, has changed the mechanism for delivery of other products.
That's right.
Right? So how does that work in the insurance industry in particular? And then how does Grab use all of its other delivery mechanisms to deliver insurance in a way that's embedded?
Yeah.
Does that make sense?
It makes sense. Actually, it's a very good question and a very big question.
It
so
is,
I probably
it
have to
is.
address those in parts if you don't
Yeah,
mind.
please.
So I think that's building on Edward's point first. I think Edward spoke a lot about how mobile phone has increased insurance access and actually the possibilities of it.
Yep.
I see that the mobile phone is a great first step.
Yeah.
But actually there is a few more steps that also need to be taken, apart from financial literacy, which we've already spoken about, and the mindset. Another one actually is a very, very operational problem, but actually it's a very serious problem.
What is that?
Premium and claims protection.
Wait, premium and claims.
Premiums collection and claims payment.
Right, so that was my next thing. But go ahead
Yes.
and tell me how that works.
Yeah, so I think going back to the experience I mentioned before, when we worked with this insurance company, which I actually admire still to this day for what they're trying to do, premium collections were done by agents going house to house, collecting cash.
In cash.
And then making a trip to the nearest regional center to deposit the premiums and also collect any claim payments that need to be made.
Right.
And this to me is a great barrier that needs to be overcome if we want to increase access to insurance to all peoples. Because actually these are fundamentally transaction costs. And transaction costs add up quite a lot, especially to these small ticket sizes.
Right. So as a percentage of the transaction, right? If it's $1 million and you have to pay $10,
It's all right. But
nobody cares
Yeah.
on a percentage basis. But if it's a $11 transaction,
Yeah.
the cost is the same.
Yep. And this relates back to Grab in the sense that I'm very excited about the developments that we're doing in Grab, especially for our digital wallet, Grab Pay, or it's known as OVO in Indonesia and
OVO,
Mocha in Vietnam.
Right.
Because digital wallets have the potential to really bring digital payments and actually enable lower transaction costs for whole society involved, especially in the provision of insurance. And then we can take that one step further with our acquisition of digital banks. Because digital banks actually can provide even lower transaction costs and faster transactions for insurance companies.
So for people that don't know, and I'll let you comment in a second, what is it about the digital banking or the digitally native bank that makes their costs so much lower? Is it just the physical plant and equipment or the people, or is it just the complete lack of friction on the transactional side?
Yep. I'm not a great expert in digital banks.
That's okay.
From what I understand, really, it's actually a combination of all
Fair
of
enough.
them.
Yep.
Digital banks do not need to provision for a large number of branches.
Right.
And digital banks, of course, that comes with lower associated people costs manning those retail branches. And furthermore, these digital bankings, because they are new, they are built with entirely brand new purpose-built systems as well. So they're no longer inheriting all the legacy systems, because I happen to know quite a few banks that are still using some of the legacy mainframes from the 1950s and 60s. I mean, they work great, but sometimes they just don't scale super well.
Well, we used them at Morgan Stanley. We called it mainframe mail.
Yes.
I'm not kidding. Did you want to comment on this as well?
I was just reflecting about.
I could tell you were smiling. You're like, I can't wait to say
a
this.
very important discussion about the operational challenges of running an insurance business, collections and payments, and of course, sales and distribution. I would say that from an insurance perspective, say Chubb, right, as a major insurance group, we're present in 6 of the largest economies in Southeast Asia.
Right.
So we do understand all this what I call existential challenge. And that's why I think when we design our products and services, we look at the accessibility using different verticals.
Yep.
Telcos being one.
Right.
We've actually distributed products through prepaid customer segments as well as postpaid very successfully. Mobility and rideshare being one,
Right.
and we have some great partnerships here. The other one I should highlight is travel. Right, the boom in leisure travel with budget airlines has been a bonanza for ecosystem players like Chubb. We understand the travel lifestyle for customers in Southeast Asia, and it's very exciting times. So I guess I'm trying to say we are nimble. We could be more nimble, and I think it is very exciting from my point of view.
Agreed.
Go ahead. Were you going to comment on that as well?
Yeah, so
Please go
I think
ahead.
we do a lot of our embedded insurance with Chubb.
Okay.
So I think a few of the examples that we do is actually, as Edward mentioned, we embed a lot of these ride-hailing insurance, personal accident insurance onto our mobility. We also, of course, has package insurance and then travel insurance. But I think the one that excites me the most, to be perfectly honest, going by my previous theme, is actually a form of embedded insurance that we provide to our drivers.
Go ahead.
So I think our drivers in general, of course, generalizing, because actually a lot of them are what we consider gig workers or freelance workers.
How many drivers now would you say Grab has? Is it 6 million more?
No, I don't think it's not in the millions, in the 500, 600,000, I believe. I don't actually quite know. Don't quote me on that
No,
one.
it's okay. It's okay.
But
I actually
it's-
think it's more than that, to be
I think
fair.
it's more than that. I think it's
I think it's
somewhere
more than in
between
the
half a
100,000s.
million and a million
Yeah, I
because it
think
does
so.
fluctuate from time to time.
For sure.
But it's
a big
up
number.
there. It's up there,
It's a
and it's a
big
big addressable market. And actually, often these drivers are underpenetrated when it comes to insurance.
For sure.
So part of our job, actually, as the ecosystem platform, is to help educate them and to also help make available affordable insurance. But I do it in such a way so that it's contextual and embedded. So let me give a more practical example.
Please.
So this is actually a product that we do with Chubb in a couple of markets, and that is providing very basic personal accident insurance. It's not very sexy, but actually it is the most important thing to our gig workers because they're on the road 8 to 10 hours a day, the ones who are working full time.
Right.
And for a lot of them, they are the sole breadwinners.
So sorry, I want to make this point really explicitly.
Yes.
I want to just jump in here because you talked before about the social impact. When I talked about being underinsured, you
Yes.
mentioned this concept of the social impact of this.
Yep.
When in the tier 2, tier 3, but even in the main cities, right, in Southeast Asia, when somebody goes out and buys a bike, normally the family buys the bike,
Yes.
right? This gets back to this GDP per capita issue that we were talking about before. But because of that, that bike is maybe, like you said, with the person who rides it, one of the most important assets in that family.
Yep.
So the personal accident insurance, along with the bike insurance, means that if that person cannot ride, simply cannot ride,
Yep.
they cannot provide for their family.
That's right.
This is corrosive,
Yes, it is.
right? It's not just toxic, it's corrosive because it means that the entire family's ability simply to eat goes away. And that's why this is so important.
And actually, it's even worse than that.
Go ahead.
A lot of the times, actually, those bikes and cars are not bought using cash.
Yes.
They're bought using credit.
loans.
Very good point. Go ahead.
So that's actually another area where Grab also tries to focus on. It's trying to provide more affordable, less predatory lending. But that is probably a topic my other colleagues can talk in greater.
No, but it's
authority
good.
than
But it's
me.
good to bring it up, though. Look, one of the things we want to do, particularly when we talk about democratization of all financial products in Southeast Asia, is to inform
Yes.
the rest of the world about just the, I don't want to say existential, but just the non-triviality around the challenges.
That's right.
Because you can look at it and say, just get an agent out into the countryside.
No.
Simple. But you could say this, right?
Yeah.
Because if you're in Connecticut, you just need an agent in Tennessee. And it feels like it's the same thing here, but it's not. And I want to make that point to people because it's the only way to, again, inform them
Yep.
of just the non-triviality about this. Sorry, I interrupted you.
Where we have done very well, we've tried many, many experiments, and the formula that we have hit on to have really good penetration is actually to embed it into the driver app, into the application which they use to work every day.
But how does that work?
So essentially, it also comes down to many innovations that we've worked together with Chubb on. So one of the things that we've done very well is actually changing the structure of the product from a typical monthly program to a daily deduction program. And the reason behind this actually is very operational but very nuanced. And people wouldn't normally think about it. I personally didn't know about this. I didn't think about it
This
until
is
I joined
great.
Grab.
This is great, though. I think I know why, but I want to hear from you.
Yeah, so for our drivers and other gig workers in general, they actually find it very difficult to save and hold back amount of money every month at the premium due date for paying collections.
But again, this gets back to this I don't want to say cultural issue, but sort of regional issue of I'm just trying to provide for my family. And on a day-to-day basis, the same human needs that every other family has, whether you have $1 million
Yep.
or $1,000.
Yep.
I want to give a little bit extra to my kid, or I want to treat my wife to something,
Yep.
right? Without thinking. But if it's at the end of the month, you're like, oh, I don't have enough for the premium. I'll do it next month.
That's right.
But if it's daily, if it's 50 cents, $1, or whatever it is on a
Yep.
daily basis, it just goes away. There's still something left
Yep.
to do those little things you wanted to do, but you've pre-saved. Sorry, it's a great idea.
Yeah, and that's actually one of the things that we've done very well, and that's one of the things that actually has caused our penetration to go up quite high. I'm not allowed by corporate to tell you how much penetration is, but I can
care.
tell you it's far better than any normal insurance person would expect.
Don't care. But again, I don't care really about the statistics. I'll
Yeah.
leave that to the statisticians. What I really care about is these big trends. You've mentioned a bunch of different times working with Chubb.
Yep.
I want to talk at a slightly higher level about, right, because Chubb is a company that's been around for how long?
Well, over 200 years.
A long time. And Grab's
yes.
been around for
Slightly over 10 years.
10. Let's just say 10 because it's easier for people to understand. Right? But from both sides, you find this partnership useful. But I want
Yes.
to talk about at scale why partnerships matter in this space and how they help democratization.
Well, great question. I think that's really the heart of the issue, right? By having partnership with leading industry verticals, we're able to have seamless access to customers. We can use big data that help us craft better products and services and address the pain point of customers. I would believe that partnership itself has evolved. It's not new in insurance, right? Bank insurance been
For
around
sure.
for a long
But it's a
time.
completely new partnership.
Correct.
New distribution models.
Exactly.
New ways of having drivers save. Like, this is all new, right?
Exactly. And I guess in the traditional sense, many outside of the insurance industry who deals with insurance sales might just say that, oh, partnerships is about pushing sales. But when I look at partnerships like what we have with Grab, it's
Right.
really about co-creating an experience for drivers very elegantly put together by Iwan, right? It makes it seamless and is stress-free, it's frictionless, and I think that's
but
what
you
we
said
want.
something really important, right? And I don't want to let it pass. Co-creating an experience.
Yes.
You didn't even say co-creating products because it's so much bigger than that, right?
Of course.
But I want to make that point again explicit so that people can stop and think about this idea that it's more than just creating a product.
That's right. And actually, just to
Is that-
expand on that a little bit,
Go ahead.
one of the things that actually we eventually, together with Chubb, arrived on the hitting formula, it's not just the product itself, but the experience actually for our drivers in signing up is fantastic. It literally takes about 3 clicks.
Yeah.
3 clicks, they're subscribed. Done.
The moment of truth, though, is what?
Claims.
Exactly.
Yes.
So, because I can get all this protection.
That's right.
It can be very easy to sign up. It can be a great experience. There can be like a little fanfare when I sign up and I win, and I can tell my wife and I can tell my kids this is protected. I can tell my grandparents, right, because they probably co-signed the loan or lent me the money. But if something happens to my bike, or if I get sick, or if I have a collision, and the claim is hard, then what happens? Like, how do you make it easy? Sorry, go ahead.
Completely agree with you. And actually, that is a core priority for us in the next 2 years.
Right.
And so far, the claims experience is something that we have been trying to work with Chubb to actually make into a more seamless experience. It's actually something that's a core project for the two of us to identify for this year and next year for our driver products. And at the moment, ideally, the ideal long-term state is that we would like all the claims be done, of course, very digitally, happening through our app.
Right. So from the app, like whoever's underwriting it,
Yes.
into the insurer, into the app, into the wallet,
Yep.
to the person who
That's
owns
right.
that wallet.
That's our ideal long-term end state, and we are
Right.
working towards that for the next 1 or 2 years.
I think so. Yes, I think Michael, as you rightly point out, it's iterative. We're learning. We're getting feedbacks from Grab, from our customers, and that's important. So again, it's a moment of truth. And having been involved in the insurance business for a while, the claims experience is still, for me, very emotional, very interesting. I get to read a lot of claims files. I see a lot of stories. I hear a lot of stories.
Right.
I go to hear customers' stories over customer centers, and it's those contextual moments that help us craft better experiences.
Right.
And it's a big journey that we all have to work on. And that's how we can also promote the democratization of insurance.
Right.
People need to see the benefit in a tangible way.
Yeah.
Actually, just maybe adding on a couple of
Please.
stories to that, if you don't mind.
Please.
So I think, as I mentioned before, I alluded to before, is that our claims experience is not fully digital yet. A lot of it is still based on emails and phone calls. And I guess this is more of a statement that I want to make to all the other ecosystem and partnership players that do want to happen, is that actually looking at the right claims capabilities of partners is just as important, if not more important, than the pricing itself. Actually, what we found is that pricing is only a third degree consideration for a lot of our driver partners. They care about convenience and claims. And I think one of the examples that I want to cite exactly of why this is important is that these sort of things can be life or death.
Because behind every claim, there's a problem.
That's right. No, it's a human.
Yeah, but there's a problem that a human has had.
That's right.
Right? So they're already going through a problem. And they're like, I just want to have my claim without a problem because I'm already dealing with this and that and this.
That's right. One of our driver partners a few months ago actually bought an insurance product, an insurance coverage from us.
Okay.
And actually, when they went to try and claim at the hospital due to an accident, actually the card didn't work. That was, of course, the most dreaded thing in the world.
Because the card was like broken.
No, actually, it was not. It's a technical back-end error.
That's what I mean, though, right? It's just whatever was happening, it
That's
didn't
right.
work, right?
It's the biggest nightmare, of course, you could face when
Sure.
you're a driver partner. This driver partner's arm was broken.
Right,
And he did not have any spare cash, and the cashless card did not work.
I understand.
His option was to only go home and treat it himself at home.
Right.
And that's where actually the difference between a good partner and a bad partner will come in. That person was able to call us, and actually we were able to inform our insurance partner, Chubb, in this case. Actually, I didn't mean that one. This was actually unintentional, by the way. In this case here,
That worked really well, by the way. Go ahead.
Chubb, in this case, was able to actually get onto it in the case and solve it within 2 days. And so that was a relatively good claims experience, because even though something went wrong in IT, which does happen all the time,
Right.
even at the best companies, it was still able to be resolved within a day.
Right.
And so the driver partner was able to get his treatment. So that was a good experience.
They're always outliers, right? And of course, it's about how we respond to that.
Yeah.
That's right.
Because it
And-
matters, because the outlier does matter. Sorry, go
and
ahead.
improve the process. I think the good aspect of understanding all these different customer pinpoint, which Iwan elegantly put a few examples together, is that it's going to help us craft more robust infrastructure. Let me give 2 examples that
Please.
the points to how we can make access to our services, for example, more frictionless, right? And the progress of using AI to handle claims is speeding up, right? We like many other companies, we're looking at how do we automate claims settlement. I think data is something that we are working on, putting unstructured, structured data together. So I'll say that's a great progress, which will help. The second is, of course, omni-channel, right? Sometimes I ask myself the question, if I'm in trouble, do I want to send an email or do I want to call a helpline? So I think instinctively, if I'm really in trouble, I might just call and pass on the message. So I think we're now, with cloud computing, with connectivity that we speak about, and with app access, omni-channel is the way forward. That for us and for partners provide interactive live status of how we handle customer pain points. And I think that's a big commitment that we strive towards. And I hope, we go on this journey together.
I agree with that completely. As in, a lot of our claims are done automatically settled.
Right.
But actually, what I really want to agree and emphasize more strongly on actually is the human element is very, very important.
Empathy.
Exactly. No, that's the edge cases always slip through the crack. No matter how great an insurance company you are, there's always going to be edge cases.
Right.
And actually, it's the same for us as a tech company. Even though we're a tech company, and you can see if you use our app, there's a lot of help desks, there's a lot of chats.
Yeah.
But actually, what we find is that the greatest customer experience still comes from the call center.
Never going away.
It's never going to go away.
I've been
I
saying
don't
this
think
for
it's
a
going to go
decade.
away.
It's never going away.
Never.
Humans, and again, we talked about this before we started recording. Humans make visceral connections with other humans.
Yes.
Not with machines, even if the machine sounds like a human. Once you figure out that voice on the other end is some kind of automation process, you just lose that connectivity.
Yep.
I agree with you completely. Completely.
Well,
ahead.
I guess that's how I think about when we think about the whole, say the insurance value chain and sitting within the financial services value chain. Yes, we want to make the distribution process seamless, frictionless, but still we need to give customer nudges to remind them, hey, if you need, if you have an issue, for example, which you need to make a claim, don't forget you have insurance cover. So I'm a fan of making sure that we build that great customer touch point, that points to the customer needs in times or a change in life status, right? A lot of us, yes, we're in the ecosystem play, we're in the financial services play. It's more than just transaction.
Yeah,
we want to
has to
really
be.
build a customer lifetime value. And I'm proud to say Chubb is a company that can provide that customer lifetime value by building the right products, as we all like to make progress in our lives. So it's a big journey. It's very exciting.
Indeed.
Okay, I'd like to thank both of you. Edward Ler, Executive Vice President, Head of Southeast Asia at Chubb, and Iwan Juwono, the Head of Insurance at Grab. This was awesome. Awesome. Thank you both
Great.
very
Thank
much.
you for having
Great
us.
talking to you, Michael. Great talking to you, Iwan.
Indeed.